A lot of people are always asking me this question, TJ, should we fix our interest rate or should we use the variable home loan? And there's no like one answer to this, but I decided today, let me jump onto this topic and give you a little bit of background so that you can be able to understand and make the rightful decision on which one is better in South Africa, especially for you, my good friends. If we are meeting for the first time, my name is TJ, your host, and I'm a former banker and founder here at the TJ Tribe. And I do business with a focus in student accommodation, flips, which is buy and sell, and coaching, with the hope that all of us, as young, upcoming modern parents, we can be able to have passive income from real estate. Welcome to the channel. Imagine locking your home loan rate at 9.5%, which is like 5 years ago, but then rates kind of like drop to 7%. That would mean that you'd be stuck, right, for those 5 years. Now, what I'm going to do, I'm wanting to explain the pros and the cons of how best to choose the best option based on your stage in life, and more importantly, your investing goals. Because here at the TJ Tribe, we're always talking about how best can we make alternative income using real estate, and interest rates, or should I say using the bank's money, can be great, but can also be against you. So my good friends, let's jump into it. No, so why would one take the decision to want to take one or the other? I just want to mention that most banks in South Africa usually take the default of variable interest, not unless you have asked them for the fixed interest. So if you have to look at the decision from a long-term or short-term perspective, you need to know that interest rates obviously affects your cash flow and the risk that you are taking obviously on this asset. Obviously you're going to own it for the next most bonds around about 20-30 years, so you need to be able to manage your risk accordingly on there. So let's jump onto it. Let's explain first what is a variable interest rate, because back in the days, these terminologies used to kick my bum, but I'm thankful that over the years I've been able to understand this, so I can be able to share that with you as well. Well, the definition, my good friends, of variable rate is that there is what is called South African Revenue, South Africa Reserve Bank, right? South Africa Reserve Bank, they've got what they call a prime lending rate. So remember, money is made somewhere in the government. The Reserve Bank is now then sells to all the other banks, and then the bank sells to us. So everybody needs kind of to make a cut, right? So this prime lending rate, it's also a cut, right? So they're making a cut there. Now, I think the prime lending rate is sitting at, when we're doing this video, at around about 11.75. So if you have to take your bond at prime, let's say they say prime -1, prime minus 0.5, it just basically means you're less than that, right? If it's a prime plus, and then that means that you're a riskier client, price +2. There's other banks that we have seen that do a prime +3. That's their default. Banks like TAF and some of these others that back you in volatile neighborhoods. So that is prime lending rate. Now it moves up and down, and as you have seen, the governor comes out and then he announced, if you don't know, go to the SAP website, South Africa Reserve Bank. They will announce these things, and everyone that you know who's in the real estate space, agents, they send you, they spam you on your WhatsApp. We know it has gone up or it has gone down. We're all listening to the news, but anyway, they're just being nice. Now, the pros and cons of variable rate is that obviously from a pro perspective, you benefit when interest rates go down. That's the gold. We're all chasing for that. It usually starts cheaper, or should I say it's usually cheaper than fixed rate. So already now you know fixed rate are generally higher than variable. The cons to that is that it is risky in rising rate environments. So as and when, I'm sure you all realize just post-COVID, interest rates just continued going up. Why? Because obviously we're in a rising rate environment there. Your monthly installment is unpredictable, so you're all waiting for the governor to make a speech, and then he makes a speech, and then boom, all the banks start sending you a letter to say your bond is going up. So is it good? Is it bad? I don't know. We're going to come back to that. Now, what is a fixed rate? So let's talk about the fixed rate, my good friends. We have made a definition of the variable rate. So now the fixed one is, it basically locks to a specific rate. So you are saying, remember we spoke about the prime, which is 11.75, and maybe now your fixed rate is now going to be on 12%. Normally the banks try to fix you or get your bond to be fixed, not to fix you, like I'm gonna fix you. No, not that. The bond is going to be fixed usually at around about 5 years. So for 5 years, you can fix your bond, which basically means that if they choose that your fixed rate is 12%, for the next 5 years, it's going to be like that. There's great benefits to that. I'll speak to that. Then obviously after that, the fixed term, it reverts automatically to variable, and you need again to have the conversations to the banks. Pros to that, easy, right? Very easy. Peace of mind. Ne? You know you're paying X amount. You're paying 12 grand and you're paying 12 grand. You know, it's a bond of $1 million and you are on 10%. You're just paying 12 grand. We're just giving out examples, right? And that's what you are. So same payment each month. It doesn't fluctuate. Bingo, for the next 5 years. If you decide to top up with another 2 grand, you know, for the next 5 years, it's 12 grand plus my 2 grand. It's like that, right? Is that a pro? Yeah, I think it is for many people, especially if you're starting off, and if you're an investor as well. It's a good pro. For me, it is. I've utilized this pro in many of my other deals. It's great in rising rate market. There's a moment in time in South Africa when our interest rate was just sitting around about 10 for the longest time. But you can check, we've done the history of interest rate in South Africa, and you have seen we've gone all the way up to 25%, if I'm not mistaken, at one point. And but we've been stable around about the 10, 11-ish for a long time. So it is possible that interest rates can go up. The cons to this, my good friends, of the fixed rate is, number one, it starts off higher than variable. It's a standard. That's what always happens. Number two, breaking fees. If you can cancel or resell or refinancing earlier, there's a little bit of a challenge there. And then thirdly is that you can't access some benefits like extra repayment flexibility. Now they won't generally offer you that. So these are the things, my good friends, that you need to know. But if you need to correct me somewhere along the line, correct me based on your experience. When should you be choosing a variable rate? When should you be choosing that? Number one, if you're planning to sell or refinance in about 2 to 3 years, I suggest that that's a good plan. If you have room in your budget for changes, hey, it's a good place to start off on a variable rate. Or if we're expecting an interest rates to fall, you know, you're thinking that, like now the interest rates have been coming down. So if you're thinking that it's going to fall, then obviously you want to keep it on a variable rate until it gets into a space where you think this is the bottom. So let me take on a fixed for the next 5 years. Does it make sense? I'm hoping that this is a great value to you. And then the last one, what I do think here on variable, it works well for investors who understand how to use what we call the BRRRR strategy, the buy, renovate, rent, repeat cycle, and then you refinance, and then you're going to sell. So for someone who's trying to do these short deals, right? We've done so many BRRRR and flips here. You have seen how those works, and if you're new here, jump onto any of our YouTube videos that give you this. When should you choose the fixed rate? Well, number one, if you are a first-time home buyer and you are needing certainty, right? You are saying to yourself, "Ooh, I'm not so sure. I might not have a job. I might not this. I might not this," and you are looking for sure, guaranteed. I'm going to be paying 10 grand and nothing else. That's what you need to do. Choose a variable, but Sometimes the fixed rate could be slightly higher than what you'd have been paying on a variable. It's a catch-22, but you need to make a decision. I'll show you just now how we make the decisions. Or if you're one of those people who are living on a tight budget, most South Africans are living on a tight budget, but they actually don't exercise this route. It could be a saving grace for you for the next 5 years because your bond is not fluctuating, and then you're just putting it on a fixed rate, and you now need to worry about all the other small things. My name is TJ. I'm your friend. I'm just trying to teach you some cool things. The other one there is if you are expecting rates to rise sharply. We have seen this before. So obviously rates go up and down. But obviously you now need to do your homework to see in which direction they are going. And then you make your own decision using your medulla oblongata to think about it. Now, my ideal here, if you are going to lock in your home loan, you have to think or plan or assume that you're going to have this deal for the next 5 years. If you do that, that's great, because then you're going to reap the benefit of that. I want to give you some real life examples. Soon after COVID, I've got a client that who's here at the TJ Tribe, who's actually also a subscriber here. They locked their interest rate at 8.5. You know, interest rates, they went down. And so they rode that whole period of COVID and the next 5 years on a lower interest rate of around about 8, and they saved thousands of repayments. They just made a decision at that time. Whilst many of us were talking about what masks to use and which auntie makes the right masks and all of those things, they just thought, pooh, what should I be doing here? They took the action, bingo. My good friends, that's what we do here. We teach you to see what other people are not seeing and then implement it. Hey my friends, I apologize that I had to break this conversation, but I just wanted to bring you in this conversation of property management. This can become such a hassle. If you've got more than one tenant and they're in different places, this can really become a stress, because all you're now needing to do is to manage tenant issues, maintenance calls, late payments sometimes, and endless paperwork. So my good friends, I have been deploying all my properties to a company that is called Productive Realty. They are out in Boksburg, and all they do is manage properties, particularly for early investors, particularly for seasoned investors, actually for all investors. And they do this because they themselves, they are also investors in properties. They understand the game of investing and managing. The money is not made in buying properties. I always say to people, the money is made in the management of the actual property, because that's a lifelong, you need to be able to pay all the things that you need to pay for. So the company Productive Realty, my good friends, and Leroy Slava, he has a big team there, and they manage their portfolio, and they can also manage your portfolio. So if you're in and around Johannesburg, particularly in the east, they are readily available to actually just be able to jump on board and take over your properties wherever it is right now. They will do placements for you. All of these things that we spoke about, the tenant issues, all of that will be gone, because Productive Realty will be able to manage that for you. So my good friends, all you need to do is drop us an email. You can see where it is here, and the team at Productive Realty will be able to take all of your hassles away from your tenants, and you can be able to have peace of mind, sleep, hassle-free investments whilst they are managing all your tenants for you. So what are you waiting for? Be like me and jump on to Productive Realty. Let the guys help you out. One of my other clients on the other side, who's also a tribe member here, they went on to buy a property, I think it was in 2019, 2020, and they fixed the rate, and it was too high because some interest rates, they went down. We also saw it during COVID, and they obviously paid more. Wrong decision at the right time, at the wrong time. Yeah? Okay. My final thoughts on this one is you gotta figure out whether you are looking for, I'm gonna call it a peace of mind or flexibility. There's two things here: peace of mind and flexibility. I'm a flexible guy because I'm a businessman, right? I like to be agile, if I call it that. But if you're one of those people, you're starting off and you still have 3, 4, 5 properties, fixed rate, I always assume it's a best bet. You own a house, fixed rate is also a good rate, because you know exactly how much you're going to be paying for the next 5 years. You can plan better and all of those nice things. Now, as I land the plane, this is the most important part. My good friends, it's not about, I'm going to repeat this again, it's not about which one is better than the other. Okay? It's about which one fits your plan. I'm going to repeat that again, right? Because let's not exchange notes and say which one is good. I think this one is good. No. It's not about there's none of them are better than the other. It's not white or black, right? We need to stay in the gray area. And the gray area for me is about which one fits your plan. Your plan could be different from mine. I'm looking at flipping this property. You're looking at keeping it for the next 30 years. Again, our departure point of money is totally different. So we need to look at this differently. So my good friends, as I land the plane, thank you for being here. And if you're new here, hey, welcome. And if you're one of those people that are returning residents to the tribe, thank you for being here. I really appreciate you. Don't forget to subscribe. And also, don't forget to share this valuable information that we are sharing. And until we see each other again at the next video, it is I, your boy, TJ. Boom, boom.